In Japan, the Nikkei fell 0.6%, and Olympic organizers on that side will ban spectators from the upcoming Summer Games in Tokyo after a state of emergency in the city was declared by Japan as the country sees rising COVID numbers. The state of emergency will last until August 22nd. Looking at the European markets, they traded higher this morning despite a global sell-off. So you can see on the screen, lots moving around, a little bit of red here and there. But this is as, of course, the concerns around the global economic recovery are coming back onto the fore. Looking at U.S. futures trading lower in early morning trade. And according to CNBC, the President Joe Biden's administration will be signing a new executive order aimed at cracking down on competitive prices within big tech. The whole point of it is basically they think that the tech sector is wielding out some of the smaller competitors and exploiting consumers' personal information. But to talk to us about the themes that have played out this week, some of the company news as well, we are joined by Nesson Nair, who is from Sasfin. Nesson, thank you so much for your time. Let's have a quick check-in on the JSE before we get into more detail.
Yeah, so the stock market's slightly higher today, as you pointed out, but I think, we're still reeling from what was clearly, for me, the most difficult year this year. We started on Monday with news that the Chinese authorities were cracking down on Didi, the ride-sharing app, about data sharing and data integrity, data collecting. Big issue now across the world. We had Papia come in last week as well, which I think just increased people's sensitivities. Nasdaq is having a horrible week, the whole week this week. The shares were down for most of the week. The resource shares as well, heavily sold off during the course of the week. We're seeing a little bit of a recovery today, both in the Nasdaq shares process, as well as some of the resource counters, but it's really, just a mild pullback from a week that I think a lot of people, would wish that it was coming to an end.
Something that investors are wishing could come to an end. Nigeria and that 63 billion rand fine against MultiChoice. MTN went through the same thing last year, and I'm wondering whether this is hurting the perception that Nigeria is, a good playing field for business.
Tash, I think excellent question. If you add the casualties, you'll remember that Telkom many years pulled out of Nigeria. We had Woolworths pulling out of Nigeria. ShopRite not so long ago also been there for many years, decided to pull back, not even to mention disastrous investment Tiger Brands made in Dangote flour mills, and eventually wrote off, I think, close to 1.5 billion rand in Nigeria. So certainly from the evidence, it doesn't seem that Nigeria is a very investor-friendly relation with South Africans anyway. But it's a tough world out there. I think governments themselves are looking for as much funding they can get their hands on. But we'll be keen to follow the story very carefully. One really has to look at both sides of the story as well. Exactly, what MultiChoice did or didn't do in this case as a result. And that will only inform us as to whether or not, the Nigerian authorities have a case. But certainly on the evidence, I take your point. Not a good environment for South African investors, unfortunately.
What's your assessment of the pace in global economic recovery right now?
So a tough one there as well. We all thought that when the vaccine was announced last year, the invention, the discovery of the vaccine, that it was going to be just a few months before we would get over the whole COVID-19 disaster that had befallen the global community. But unfortunately, it's been complicated by all these different variants. As we go through the Greek alphabet, beta, delta, gamma, and end up in I don't know what, sigma or rho. It's going to be a journey in dealing with this pandemic. I think a lot of us have realized. You mentioned Japan. I think a lot of nations, and even in South Africa and Gauteng in particular, a lot of us are struggling. We're trying to contain the infection rates and ensure that the healthcare infrastructure is not overwhelmed. So it's going to take a long time. And I think until we get that herd immunity on a global level, it's very hard to talk about economically what the impact is going to be. So a lot of the discussion around the US Fed as well, looking to increase interest rates. Personally, I think it's still premature. I don't think, we're at a stage yet where we can call the trajectory or the direction of interest rates until we get the pandemic under control.
Nesson, thank you so much for your time. Lots to talk with you about, but we'll definitely have Nesson back on the show next week. There's some stuff that we want to focus on. The US 10-year bond yields that were trading lower this whole week. They seem a little bit better, but we were going to unpack whether this was a fundamental move or it was just basically on the technicalities that this bond movement was happening. The other thing we would like to basically dissect next week, Imperial Logistics, basically dissecting the company and why DP World was very interested in this particular company.